Hey everyone, Davis Oliver here with the Tax and Save case of the week. This is an exciting one in the sense of what the impact could have been. So, why do I say could have been? Well, this is a client that learned the cost of waiting the hard way. And it was a quick turnaround from that cost of waiting. But this is a big thing, kind of a continuation and elaboration on last week's case study, or really kind of defining why that case study is so profound for those that are listening, and why this should be something you should look at for yourself at taxsafe.com. So before we get into this week's case, again, you can find all of our content, weekly case studies on many clients that we get the blessing of serving at taxsafe.com, our YouTube page at Taxes Saved. You can see all of these things and some great possibilities for yourself of what we achieve for other clients. So with that said, let's go ahead and dive right in to what this client could have done, but ended up learning out the tax cost the hard way. So this client, they made about 100 grand just or sorry, 200 grand of earned income, right? So that's between their pension, their social security, and they're in the age of 65, right? Both husband and wife out of the great state of Virginia. And so at age 65, right, they were self-employed for most of their career, but they had a big conviction in heavy metals, commodities, gold and silver, in fact, which is, like you heard me share last time on our market sentiment, that that's an asset class that's done 30 to over 200% just this year. And so if you think these assets will play out, and this client thought they were going to keep performing well, but it was hard for them to experience the pain of what was coming because they haven't felt it yet, right? And so this is what's big. By doing this type of planning at Taxes Saved, we can get out ahead of what we can prevent them from. So let's go ahead, as we always do, share my screen, give you a real life scenario, some real life visuals of numbers, and see what this client was doing, what they happened to their money as growth goes, and then what the tax bill was and the solution they could have had to make it go away. So we'll go ahead and share my screen, and we'll dive right in. And so you'll see here, we should have the screen here on your end. And so you can see this client, like I said, had $200,000 of baseline income. Their SEP IRA was worth $600,000 when they came to us. But gold and silver had a nice rally, and within 2 months after meeting with us, it went up to $800,000. And they wanted to Roth convert the whole thing. That's what they wanted to do. And they think it's going to keep going up even with the pullback we've had in metals. So that said, if you took their income, 200 grand plus $800,000 of Roth conversion, it bumps it to $1 million. And they're in Virginia. So they have a state tax of 5.75, married, filing joint. And that $1 million of income would have had a tax bill of state and federal $341,000. Now, to look at the difference there, if they would have converted, right, 600 plus their $200,000 of baseline income, the value was 600. What they would have converted if they met with us and converted right away was 800,000. So $200,000 less. We went from 350 some to 250 some. So look at that. Million at 341 versus, you can see there on the screen, 255. So difference between 341 and $255,000 of tax, $86,000 they cost themselves just by waiting, just by waiting. So if you think that is a possibility for you, this is where the third scenario plays out even better. So what could this client did that prevent all of this from happening, of this high taxable event of the growth on their money, right? They can't control the growth, but the reality is, folks, as you all know, and you've seen your IRAs, your 401ks grow, the markets are efficient typically, right? Goes up, average 8, 10%, maybe 8% after fees and expenses for the S&P 500. So even if you're not in a gold and silver type of, metals mania, we're calling it right now, it can still play an impact, right? Time is not on your side when it comes to Roth conversion. But here's where we layer in the third component. And the third component is the strategy. This client is not needing, they don't want to work more, they don't want to do more. So they implemented a simple software strategy that generated a 5 times tax deduction. And that 5 times tax deduction is allowing them to take that of what they would have had there, and then it allows them of tax bill, and it goes from literally, we go from, let's say they converted it at the $1 million mark, right? 800,000. So they work with us even after the $200,000 gain happened on their accounts. Well, before tax, 341. After tax, that $5,000 deduction, $50,000 investment, ran at a 5 times deduction, so 250,000. And it brought their income down to 720,000 after the standard deduction. So literally, folks, between state and federal taxes, we went from 341 to after a $50,000 investment to 234. So it saved them over $106,000 in taxes on a $50,000 investment. So the cost of waiting, folks, cost this client literally 80 some thousand dollars in 2 months. Don't let that be you. We sadly see that more than we should. But again, tax planning is new, but timing is not on your side. We look forward to educating you and seeing how these things work for your goals and circumstances. Hopefully, this was helpful for you today. Again, we really, each client scenarios are very individualized and very circumstantial. But if you want to learn more how this could impact you and see your own numbers, we offer a free complimentary service at taxessave.com, free complimentary tax discovery with me or one of our team members to look at these numbers and see how we can provide potential tax saving solution. It's simple, folks. We want you to keep more, live more, and leave more. And the tax man is the biggest decider of that. We look forward to helping you learn how you can use tax code to your benefit. That's taxessave.com. That's taxessave.com.